There's also the Mar-a-Lago Accord.
Oh, yeah.
Yeah, and they're talking about 100-year bonds,
Yeah.
zero coupon.
And a markdown.
Sorry?
And a markdown, right?
Yeah.
Yeah.
Yes.
I mean, that's sort of a pretty wild idea. What do you make of it? How serious are they about this, do you think?
Well, the fact that they actually put it in a policy paper, I think they're pretty serious about it.
Yeah.
But the how realistic it is to actually enact such a policy, I think, is very up in the air, very uncertain.
Yeah, yeah. If that were to happen, what happens then? Where do yields go?
If the 100-year bond idea, we think that's going to be, well, okay, first of all, how would you actually do it? And the fact that the countries that actually depend on U.S. military aid tend not to hold a lot of U.S. treasuries, except Japan.
Right.
So a lot of holders of treasury, China continues to hold a lot of U.S. treasuries, right? Are they going to go along with this program? They don't need U.S. military aid. Europe does, but they don't hold a lot of treasuries. So we think the idea that this could actually happen is the probability is very low.
You know what? And I mean, they swap places, right? Depending on what year you're talking about. But Japan and China, the top two holders of U.S. treasuries, foreign holders, right? Japan may play ball, right? China probably will not. And in fact, what we've seen with the indirect bid over the last several years is it's been fading, right? And China, since Russia invaded Ukraine, seized. And Putin had about $300 billion of his money seized, right? China's going, okay, I'm not so sure I want to hold that much in U.S. treasuries, right? I better diversify, I better hedge, therefore recycle less of that $1 trillion surplus into treasuries. And I don't know, gold is looking pretty good. Crypto's looking pretty good, right? That's what's been happening.
Yeah, look, the uncertainty, I think if they are serious about implementing this policy, as you mentioned,
yeah.
Existing holders of treasuries will probably sell. And what does that do? It actually, ironically, causes yields to rise, not decrease, which is what that policy...
Wouldn't China be shooting itself in the foot, though, if they did actually sell, as opposed to, scale back buying, slow down, or even stop buying? If they actually sold, I mean, they'd be hurting themselves, wouldn't they?
It depends on what price they sell, right? And to your point, they do need to diversify given the ongoing trade war and the uncertainty about their sort of trade relationship with the U.S. Are they still going to be running a large trade surplus with the U.S., even though that has actually shrunk quite a bit? And U.S. trade as a percentage of China's overall trade has also shrunk quite a bit. So China is no longer as dependent on U.S. demand for the goods as they used to be.
Okay. Japan, let's go there real quickly. About a minute or so left. I've got dollar yen round about 150 handle, right? 10-year, their JGB is about 158 basis points or thereabouts. Given April the 2nd, what could happen, even to Japan, right? What's the BOJ going to do? Can they continue hiking, normalizing, and getting the value of the yen higher as well?
We think they can, despite the uncertainty about Liberation Day and tariffs and whatnot. And that's because Japan, like China, is much less dependent on the U.S. in terms of their trade. A lot of Japanese cars sold in the U.S. is actually made locally in the U.S. Yeah. And so actually Japanese-made exports to the U.S. is much lower than it was, say, 1985. At the last accord, the Plaza Accord, back then, many Japanese cars were still made in Japan. So we think BOJ will likely still hike because inflation is still printing pretty high.